A few days ago, Bitcoin was at $73,000, and then last night it briefly went down, touching $65,000. An $8,000 13% drop in less than 72 hours. Now most people are frightened by this extreme volatility. And understandably so. The downside volatility can be very uncomfortable. Who likes watching a significant chunk of their wealth fall 13% or more in just 72 hours? But Bitcoin's volatility is not due to the inherent instability of Bitcoin. Contrary to its price, Bitcoin itself is actually the most stable and most predictable asset in the world. It has no CEO, no management team, no earnings to hit, and no competitors competing for its profits. Bitcoin is a physical bearer asset, something you can physically hold without counterparty risk, like gold, and it has no dilution risk. It's the only asset with a predetermined supply distribution schedule and an immutable fixed total supply. So why is Bitcoin's price so volatile if the asset itself is not changing? Companies go up and down because the present value of their future cash flows changes. Bonds go up and down on default risk and inflation expectations. However, Bitcoin seems to have a mind of its own. Why is it so volatile if it doesn't change? It's humans that are volatile, clearly. A large majority of the capital in the world has no idea how to price Bitcoin. Many say it's worth zero. Few say it's worth over $10 million. A very small minority of the world has learned that Bitcoin is simply a better form of money that they can buy and save. As Bitcoin itself continues functioning and becomes more scarce over time, it will continue increasing in value relative to dollars. As more humans learn that Bitcoin is better money and they move a large portion of their wealth into Bitcoin, then Bitcoin also will go up in value relative to dollars. And that's where almost all of the volatility is from. Over the last 13 years, Bitcoin has had a CAGR of 140%, which is absurdly high. Bitcoin is volatile because it is growing so fast. So just because Bitcoin is highly volatile in the short term, doesn't mean there is substantial long-term risk. Consider the recent $5,000 drop in the context of Bitcoin's history. Bitcoin itself traded for less than $5,000 in March 2020, just 4 years ago. The volatility of Bitcoin is more due to Bitcoin's rapid global adoption that has been occurring for the last 15 years. This can be confirmed by looking at Bitcoin's Sharpe ratio. Bitcoin's Sharpe ratio shows that its returns are worth its high volatility. Bitcoin has had a sustainably higher Sharpe ratio than all other major asset classes. This is showing that the price of Bitcoin is effectively melting up in a superior risk-adjusted manner. If Bitcoin was growing at a steady 140% annual rate, what would happen? Well, investors and speculators would catch on to the trend, buy Bitcoin in size, and cause a massive exponential unsustainable bull market.